Salesforce just delivered a record quarter, 10 billion in sales, cash flow exploding, and AI-powered growth engine remains up and running. But with valuations already fluffy and macro cloud overheating, the question is CRM Salesforce a stealth value bet or a high-risk growth gamble? Let's unpack this at WealthDom, ladies and gentlemen. I'm Norbert Menhardt and I build and protect wealth right here at WealthDom. So like and subscribe, and let's just jump into what the heck is Salesforce. First of all, the company is the world's leading cloud CRM and enterprise software provider, offering tools for sales, marketing, data, and analytics, and increasingly AI-driven services. Think AI agent, data cloud tasks, automation, so on and so on. So in a shifting world, fast to cloud plus AI plus CRM sits right at the crossroads. The stock has been under pressure in the last couple of months and also the entire year, I would say, but many see the current dip as a potential setup for a rebound. And we had that rebound we're going to talk about. But first of all, let's take a look at their earnings, because the Q3 earnings for 2026, yes, I know it's kind of weird with Salesforce, but just bear with me. So revenue up 10.3 billion this quarter, up 9.0% year to year. Then we had subscription and support revenue. They're actually almost a subscription service, 9.7 billion, up 10% year over year. 9% was the consensus. Margin, and let's jump to margin now. For GAAP operating margin, a 21.3%, and a non-GAAP operating margin of roughly 35.5%. Also, cash flow, sorry, those were the wrong numbers. Here are the cash flow numbers for Salesforce. Their operating cash flow, 2.3 billion, up 17% year to year, and free cash flow, so cash is gone not for operations, 2.2 billion, up 22% year to year. So backlog future and revenue futures, basically how much do they expect to earn next year? Well, currently their remaining performance obligations, their CRPOs are 29 billion, up 11%, and total remaining performance obligations, RPOs, nearly 59.5 billion, that's up 12% year to year. So good signals there for the forward subscription revenue. Now, so let's talk shortly about capital return. Salesforce returned 4.2 billion to the shareholders this quarter. That's shares plus buybacks, share buybacks plus dividends. And guidance for the next year is risen, or has been risen, to a whopping 41.45 billion. Okay, what did the stock do after the earnings? Well, it went up 7% so I just printed 7%. It's also up in the pre-market on the second day now. I like to give the stock a 1 to 2 days window for us to really determine what the heck is going on with the stocks. It's really up. This is a really good signal. We're also going to come into technical analysis later on. But for now, let's just take a look at this diagram and how we want to cut it. Some cautions remain with Salesforce, but jumping this high, so I think it's up like 10% right now. But be caution. Adobe, we know it's down, and I am an Adobe shareholder. I'm suffering there. But software companies feel the pending AI pressure on them. I think this is going to resolve itself, but not in the near future. So expect volatility, momentum, not to be that big of a push, but volatility to be high. We need a momentum push, but profit taking and macro headwinds could pull this stock back again. Okay, so just back, that's what I mean with volatility. Price is going to up and it's going to come down once again. Be very, very careful with this stock. A couple of words from the CEO, Mark Benioff. So I quote here, our Agentforce and Data 360 products are the momentum drivers. We now have nearly 1.4 billion in ARR, an explosive 114% year over year gains. So also the CFO Robin Washington added to that the company is confident about hitting its long-term target, more than 60 billion in organic revenue by the year 2030, and that all of that under their profitable growth framework 50. Okay, so what you and I should actually know about this, read between the lines, is that Salesforce isn't just scaling CRM, they're doubling down on AI plus data enterprise stack, Agentforce plus Data 360 plus recent acquisitions. So as the next growth engine could be this. I just wanted to add something here that's not in my notes. Just think about this, because actually I follow 3 major software companies: Salesforce, Adobe, and one more, which is a Canadian, and that is Constellation Software. Okay, so let's just think about it. If they really would go out of business, okay, that's the worst case scenario. I don't think so. But Salesforce did some acquisitions. Adobe did not do any acquisitions, and I think that's bad. And Constellation Software did again a couple of acquisitions. And if you would do any kind of acquisitions as a major software company, actually that's what Constellation Software is doing. They're just a company that are buying super well organized, well driven, well managed software companies. So they're kind of the Berkshire Hathaway of software companies. And isn't this the right time to buy software companies where they all are down in price? I think yes, it is. Now, could this take a couple of years till it really pays off? Of course, but this is the time to do your acquisitions when everything is down in price. Everything is on sale now. Salesforce, like Salesforce, for example. So that means long-term potential is large, but exhaustions over next quarters is critical. Yeah. Just take into consideration next quarter will not be that good. Let's just move on and talk about the trader's take here. So a couple of plus: strong recurring revenue based on high subscription retention. That is perfect. That's also the same thing for Adobe. Cash flow is robust cash with free cash flow margin remains solid. That's very important. The company cannot go bankrupt because they don't have money or they're taking on debt. No, they have cash. They can buy and sell things. And pipeline backlog is not like it's an oil company. Pipeline backlog remains large. RPO and CRPO, good visibility for future quarters. Really, really good. Now, AI/data push. Agentforce with Data 360 gives opportunity for cloud-driven growth. And one last thing, which is kind of a negative thing, but growth rate from 9 to 10% isn't exactly blowout growth. And it's a software company, so we're expecting growth. None of the software companies are currently having growth, so maybe it's we should lower our expectation that this is actually a bargain price now for compared to the high growth peers. Macroeconomic and speeding freezes among enterprises could slow new deals down. So the worst thing that could happen for Salesforce, and actually it's the worst thing that could happen to any company. It's not AI, it's layoffs if people do not use their services. Okay, so let's also go to a technical view now. There we are on the diagram. So we have here our Bollinger Band and our couple of daily moving averages. The red here is the 9 days moving average, and the yellow down here is the 26 moving average. We can see that it's just hit its high on the Bollinger Band. So we could see a pullback in the stock, maybe a red day, and then go further out because it's on the other side, it's at 58, not oversold. MACD buy signal was just triggered 3 days from now. So if you add it to Salesforce down here, you want to take some profits, and this is a perfect opportunity maybe. Adding to Salesforce right now, I would say not the best idea. Probably expect a 2, 3, 5% maximum profit from here, but wait for a little bit of a pullback if you have that pullback opportunity. For a short-term trade, it's really good. We're currently on the Ichimoku cloud, underneath the cloud, which is not that good, but it's kind of trying here. It's getting here in the cloud. Has the dark side already, Jesus, the cloud already turned red. It's not the dark side, it's not Darth Vader wording for you back there. But I would say wait a bit if you have this is actually a perfect moment. That's why I say profit taking is on the table right now. So if you're adding here to further shares, you could see some profit taking. The share would come down, the share price would come down once more, and actually then is where you could add for a next leg up. But wait for a pullback. I would say just wait for a pullback. Now, let's just talk here realistically. Bottom line is that Salesforce Q3 2026 earnings confirms that the business is stable, cash generation is good, and it is evolving not just the CRM relic, but a player providing its new AI features and data-driven enterprise. The data-driven services are really good. So short term, my opinion, not a financial advisor. This is not financial advice. You could lose all of your money. Don't do what I do. This is just my opinion. Short term, next to 3 to 6 months, cautious bullish signals, my opinion, with guidance risen. So could see a next leg up. Let's just zoom out, see the forest from the trees. We see it has had a massive sell-off. Like all software has had a massive sell-off. Would this be the perfect buying opportunity? Wait for a pullback, then add for some long-term shares. That's what I would do. 2 to 5 years outlook. If this plays out, this could double easily. This stock could double easily, seeing ourselves up there in the 400s next year sometime. Okay, so what should you watch for? Catalyst for that growth would be Q4 results. Did they grow or not? Adoption rate for Agentforce and Data 360 among the largest enterprises. So you need to see if large enterprises adopt this. The macro and interest rate cuts would push the stock higher or lower, and continued share buybacks, of course. So my conclusion, wait for a pullback. Want to add to long-term shares, then that will be a perfect opportunity. Even now, if you want to add to long-term shares, but be prepared for volatility. In my humble opinion, this is a very good stock to own for the long term. If you liked this video, then please give it a thumbs up. Subscribe to the channel, because that's what we do here. We go over companies and we try to put them in the WealthDom portfolio, because that's what we do here. We build and then protect our wealth, not only with stocks, also with education services, and with a lot of things that are coming up on the channel. Have great plans for the future. Okay, love you all, guys. Take care. Stay safe out there. Bye-bye. Bye-bye.